old campgrounds, old RV parks, old hotels even, and taking something that has a short-term path to cash flow with a longer-term path to like expansion.
Welcome to another episode of the Radical Hospitality Podcast. I'm your host, Zeke Freeman. So everyone wants to build a glamping resort right now, but very few people actually run the numbers to see if the project works. Today's guest spends his time answering exactly those questions. Connor Schwab works at the intersection of adventure, real estate, and hospitality development. He spent 3 years with Sage Outdoor Advisor as head of their outdoor feasibility studies. He's now head of asset management at Clear Summit Investment, and he hosts the Outdoor Hospitality Podcast. He works with companies like Sandy Vans in their adventure travel space, and he's collaborated with us at Root Architecture and Development as a hospitality consultant on our Spirit Mountain project. Connor helps developers figure out one critical thing before they break ground. Does this outdoor hospitality project actually work? So, Connor, welcome to the show.
Appreciate it, Zeke. It's a pleasure and an honor to be on, so thank you.
Yeah, glad to have you, man. 20 years ago, if you told somebody you were going to build a hospitality project out in the woods, people assumed it was like a campground. Today, those same projects are raising millions of dollars across the space. Connor, for listeners that are new to this category, how do you define outdoor hospitality today, and what's going on in this industry?
Yeah, I guess this will vary depending on who you ask, but to us, and this is kind of from my Sage days, is outdoor hospitality for us is RV resorts, glamping resorts, campgrounds, and then maybe landscape resorts, landscape hotels that have individual units without shared walls. And are kind of highlighting the natural space. So it's basically a hospitality offering that's a little bit more focused on the landscape than it is on maybe the building itself, or that's a big piece of it.
Yeah. So some people say like this glamping is a trend. Others say it's like, this is the future. Like this is where we're going all in on. From what you're seeing in like data and deals that you've looked at with your days at Sage, is the outdoor hospitality still early, or are we entering like a maturity of this phase in the industry?
It has been a crazy, like I guess I got into the space in 2018 and it's been a wild ride, big boom in 2021 and 2022 and maybe carried a little bit into 23. And then I think we saw a little bit of a pullback or like a come to Jesus that kind of happened in 2024, 2025. That was, I'd say, felt across every industry, every industry that wasn't AI, basically, as I'd say taking a little bit of a pullback as the economy's gone down and inflation's hit. Discretionary spending has been a little bit tighter. And also I think international tourism is pretty significantly down in the last 6 months in particular. But where the industry is at now is I think it's professionalizing. The way I think about what glamping means and where I draw the line is I usually think of glamping as canvas-based units that have a soft walls, soft sides. And then you might also say a landscape hotel or a landscape resort, which is hard wall units, on a property where they don't have a shared wall. That's kind of how I delineate the definitions. Of course, it'll vary with who you ask. I think there is and will always be a place for glamping and soft wall units. And I think it's a nice kind of hybrid between a more luxury stay and camping. The two hardest things about camping is having the gear, bringing the gear, and sometimes the effort of going camping with your own tents and all your own equipment, to go for a weekend getaway, to get all the gear and clean it and pack and all that headache isn't worth it for a lot of people, or they don't have it, or they don't have the knowledge. So glamping is kind of that like middle stay where most of that, a bed and a tent and some comforts will be provided to you. And some can be super luxury and you can have hot tubs and heated floors and things like that. And some can be more basic. So there's a wide range. When I got into this industry, I wanted to do canvas-based units. And as I've underwrote hundreds of deals in the US, I'm starting to realize that there's some pretty significant operational struggles with that. So I think there is a place for canvas. There is some challenges, namely, oftentimes people think it's going to be a lot easier to build a canvas-based property. They think it'll be cheaper and they think it'll be faster and they think it'll be easier to get it approved. And oftentimes two of those three things are incorrect. And that is obviously depends on the jurisdiction in the county, but a lot of counties will look to international building codes. canvas tents don't really fit into that, or they can cause a lot of confusion, which sometimes can hold up your permitting process because they don't know how to classify your unit. They might say, well, we need you to have a sprinkler system in this tent. And that's kind of an impossibility sometimes, or a certain R value or a certain energy rating. And those are the things that can sometimes hold up. I guess you probably, I don't know, have you developed projects that are canvas based? Do you have anything to add on that?
Yeah, I think that's such a great question and point. All right, guys, I've got one quick favor to ask. If you've been enjoying Radical Hospitality, if these conversations have inspired you, encouraged you, or helped you think bigger about what it means to create spaces that truly serve people, would you hit the subscribe button? It's a small thing, but it makes a huge difference for our show and for our team. We're working hard to bring some of the most thoughtful entrepreneurs, builders, and visionaries in hospitality, people creating meaningful spaces all over the world. And your subscription helps us keep getting better every single week. And if you're someone who's dreaming about building a hospitality project of your own, that's what we do at Root Architecture every single day. We help clients design and bring those spaces to life. You can book a discovery call with me or someone on our team at therootteam.com. Thanks so much for being a part of this journey. It really means a lot to me. Subscribe, stay with us, and let's keep building cool stuff that serve people well. We do a lot of feasibility studies for people, and a lot of those feasibility studies honestly end up, with, hey, this does not work. And I'll say those are usually the highest ROIs, because we get to a point where we've looked at it and we've said, this isn't going to work in this area. And we've saved those clients hundreds of thousands of dollars, going down, a bad path. And sometimes, you do get to a path and it's like, okay, well, this is a longer route to get it and we can do this. And that's great too. And those, people will often end up making money. Sometimes they don't. But I think right up front, there is this big misperception that I'm going to be able to go buy an acre or two and put 200 canvas tents on it and make a lot of money. I saw that right down our road near our hotel. Someone literally did that next to Red Rocks. They put up 200 canvas tents and they were just booming. And then they got shut down that very same summer because they had no permitting, no, legal rights to do that. And all of that, was money just flushed down the drains.
They put up 200 tents.
Maybe it wasn't 200, but it was a field full of full canvas tents.
That's a big swing without having
That's
the
permits.
permits.
Big swing without permits. Even in like the STR world, us personally, like we've developed a cool treehouse, and we were told we were going to get permits on it for short-term rental, and the county changed their rules and regulations, and we had, so we sat in the gray zone after spending about $300,000-$500,000 on this thing, and we just got our license on it. And so the city has the ability to change their way, and I think Canvas especially. Is just looked at as a temporary structure. And so it's very easy to get a neighbor complaint, a city to say, hey, we don't want this. Very few will come in. So, back to the original statement of like, most people used to think campgrounds. And so that is the classification you got to get if you're going to go that route.
Mm-hmm.
So we definitely tend to lean towards hard structures when we're helping design.
Yeah. So sometimes it can hold you up in the permitting. If you're planning to add a deck, and if you're planning to add bathrooms in particular, so running utility lines throughout a property, bringing utilities to the site and running utility lines are almost always going to be the most expensive piece of your development, unless you just so happen to have municipal power, water, and sewer available at your property, which tends not to be the case if you're in a more remote wilderness area. So you're putting in septic, you're drilling wells, you might need to be connecting to power or doing solar. So that's usually the first piece you have to figure out is utilities and how much that's going to cost if they're not readily available at your site. And then one of the harder things is like it costs money to run utility lines, with the material, with the digging, especially if you have soil that's more rocky or hard to dig into. So if you're planning to bring utilities to your unit and you're going to add a deck and you're going to add a bathroom, like those costs, just for the above ground costs are going to be easily 40 to 50K for the deck, the toilet, the shower, depending on the materials and things like that and size. But I would usually slot like 30 to 50K if you're going to build with reasonable materials for those things. And then you're like, oh, So I'm going to spend, let's say, 40K on that. And then maybe I spend another 20K per unit or 40K per unit to run the utility, to bring utilities to the site and then run utilities to the unit. You're looking at 80K on your foundation of your unit before you have put the roof on. And so then a lot of people are like, oh, but we can put these great glamping units that are like 3K on it. We can furnish it for another 2K. So all of a sudden that math doesn't start to make sense when you're like, all right, I'm spending 80K per unit for the foundation, and then I'm going to put a 3K canvas unit on it that might have to be run seasonally and only be up for 6 months of the year. All of a sudden, it starts to make a lot more sense to say, okay, maybe I'm going to buy a cabin for 100K and I can be up year round and get a higher nightly rate. So that's like a lot of the situation that we've come into. And you see companies that have had a really tough time with seasonality, like Collective Retreats. They kind of famously said that they start each season with a 150K loss because they have to pull out all of their units out of storage, where a lot of it might have gotten moldy or damaged. Their nice furniture might have gotten scuffed up in the storage process. They had to pay all that labor, set it up. It takes time. They pay storage fees. So they start the season with a 150K loss because they're operating seasonally with canvas units. So, there are examples of people doing it well. I think Wander Camp is a pretty good example where it's a very seasonal, mobile, low luxury. It's bathroom trailers. That whole property could get taken up and put down in like a couple days. And it's like, hey, we're going to charge $125 so you can sleep in a bed in a bell tent and you walk to a trailer bathroom. And like, I think that is, a real big value add for a lot of people. But just, yeah, I guess that's kind of the,
Well, maybe we call this show like "Why Glamping Sucks," and then hopefully you say we should go "Why do micro resorts and boutique hotels are way better?" But I don't know. So,
yeah,
I saw you
yeah.
just had Ben Wolf on your show with Onera, and I was down there last fall. Walked through that project. They're building really cool, very expensive hard shell units with kind of a central boutique hotel. A lot of our clients are doing kind of similar. But I love, and you helped us with Spirit Mountain, which is kind of basically that.
Which, by the way,
Scale
if your
format.
listeners haven't checked out your website for Spirit Mountain, it's unbelievable. I got to do the feasibility with Zeke and Chad probably 3 years ago, and I've just been on the edge of my seat waiting for that to come to life. And wow, the photos of those units, the property is one of my favorite I've ever done a study on. The units are some of my favorite I've ever done a study on. So like, to see you guys have actually built them and they look incredible, I'm just stoked for you guys.
No, I appreciate that. Yeah, we appreciate your help on it. You did make an important note there. It was 3 years ago. So one thing, to note is like these things just take a lot of time to move through. They're not overnight projects. So, I think there is some legitimacy that you could probably throw a tent, up. What we're interested in building is lasting legacy projects that are going to be here for the next, 50, 100 years. And that's not going to be a canvas tent. So what's your thought on the micro resorts, landscape hotels, how those compare to glamping?
Yeah, I think they all have a place and could be done right. Like it's all going to come down to where, what is your property like? What is your market? What are the demand drivers? What's the seasonality? What's the weather you have to deal with? So all of those things will matter. So there's never going to be a clear-cut answer about what works because it's always going to come down to that property and that location. As far as micro resorts, I think a really big thing for operators to keep in mind is that scale really helps. It's a lot easier to run a big project than it is to run a small project. And I think oftentimes people think it's the opposite. They think I'll just start with 5 units or I'll just start with 10 units. And oftentimes that's only the capital that you have to do it. So you don't, you just have to start at that scale or even 2 units. So, if you're an entrepreneur out there, that's oftentimes you just have to start that way because getting the capital is really difficult. And maybe you run your first 2 to 10 units really successfully, and then you try to go raise private money or bank money to build a bigger resort. And you can be a successful entrepreneur, owner operator, kind of like a side hustle a little bit with a couple units and make some good money and have fun doing it and create value. But to run like a really profitable business that real professional investors would want to put their money into, you have to have scale. And it's going to be really hard to make a property work with like less than 10 units. I mean, the revenue number that we're usually always trying to stay above is $1 million per property in top line revenue. And the reason for that is because, I'm going through this right now. At Clear Summit, we have our first three properties that are open are all small, and they're probably in the 500 to 750,000 in revenue. And we just really run into trouble because it's hard to invest in good content and media. It's hard to invest in a really good website. It's hard to invest in a really good GM. It's hard to, you just don't, all of your expenses will be a percent of your revenue. But if you go and build an amazing website, get an amazing photographer, whether you have 5 units or you have 100 units, that's relatively the same costs. And so whenever you're increasing your revenue, you're dividing and splitting those costs more. So just kind of, there's many different ways to skin a cat, but that's a big one for people to keep in mind, and that it's close to my mind right now because I've really been dealing with it. Now we're finally about to open our property. That's going to be 35 units in phase 1, 50 in phase 2, and should hopefully do around 2 million in revenue. It's just like making my life so much easier. We can really invest in good execution.
Yeah. Bring on the right team, bring on the right people. Yeah. So what do you think that number is? You said 10 units, obviously that depends on, are we talking, RV units? Are we talking micro, hotel units? Or, what space are you referring to in that?
Honestly, any of them. I think any business, whether it's a campground, short-term rental, a cabin resort, a glamping resort, a hotel, I think it's all the same. And that is, I think it's kind of that million in revenue mark is kind of a broad strokes example where not a lot of professional buyers, investors, or operators are going to be super interested in a property that's less than that because the effort isn't necessarily worth the returns.
Mm-hmm.
But also, there's plenty of people out there who aren't going to be building these resorts to sell it, or to get a professional operator or third party management company in there. There's a lot of people that are doing this because they have a lot of passion and they want to make some side money. And I think there's definitely a way to do that. I think from a customer perspective, I think you're always going to get a better customer experience with less units, with the soul. You get the soul and the story of the founder or the entrepreneur. And I think from a customer experience standpoint, the smaller properties with less units are always going to be a better experience and a more sought after experience. So I think you definitely win in that area. And I think the way consumer preferences are trending is like, there's so much big corporate stuff out there. Like that's really losing its appeal. And I think the mom and pop niche experiences with character are going to become more and more scarce and make them more valuable and have higher demand. So I think that is a factor that's really working in, the micro resort industry's favor. Does that make sense?
Yeah. No, I mean, I think the owner that wants to get in, gets their hands dirty and get involved, they have some leverage there. We do that with our treehouse over here. For a while we had a management company, and like, what, it's out our back door. It's easy enough to get over there, check in on our guests. It's not a huge lift. We're doing the hotel. We're going to have a professional management company, which is honestly easier, doing 22 units. It's like, they'll take care of that management piece and they'll do it with excellence. I think you have to figure out what your lane and where you want to land. But on this, are you looking to develop and bring in additional capital? I think that's really wise. It's like, it's got to be at a certain scale that there's enough meat on the bone to bring in other people.
And it can be smaller, and you might find an angel investor, who's really tied to the story or tied to the land or tied to the area. And I think it can certainly work. I'm now in the big investor world, and it's kind of changed my mindset about how I think about these things. So I'm like a little bit less in the scrappy entrepreneur mindset than I used to be, a little bit more in the investment world.
Let's dive into that. I want to hear about the new stuff that you're doing. What's Clear Summit Investments, and what does the company do, and what are you doing with them?
Yeah, so Clear Summit Investments started about 18 months ago. I know them because I did the feasibility studies for their first 2 projects in Arizona, one outside the Grand Canyon. It's a 12-unit Airstream resort. And the other one is outside of Flagstaff. It's going to be that 50-unit cabin resort. And they also have some RV projects. And then in Colorado, they have 2 hot springs, Desert Reef Hot Springs and Cottonwood Hot Springs, which are both amazing. And basically, what they do is they go raise money from accredited real estate investors, minimum check size of 50K. And then they go out and buy typically distressed value add hospitality properties. So whether it's an old lodge out at a hot springs that hasn't had any TLC in a decade, or an RV resort, although we're kind of moving away from the RV world, and we go buy those, we renovate and improve them and update them. Ideally, we expand the key count, and then we bring in, professional management, which is me. And that basically just, from the most basic perspective, is we just bring it into the modern world from website, marketing and advertising, SEO, social media, just do like some fairly basic blocking and tackling to bring what might have been a mom and pop operation to more of a professionally managed organization. And then those properties make a return, and that return goes to the investors. And usually we're targeting around a 20% return or 20% IRR back to our investors.
Nice. Are you wearing the management hat, you said, on this?
Yes. So my role is the head of asset management. So basically, I'm in charge of making sure the properties are profitable. So I directly oversee the property GMs. And then we have a virtual marketing and advertising team who helps across the portfolio, and I oversee them as well.
And are you putting GMs on each site?
Mm-hmm. Yeah. Yeah.
And sometimes asset management, and property management are a little bit different. With the GM on site, do you guys kind of skip the property manager and just do asset management straight to a GM?
You could call them property managers, is probably a more accurate title. I don't really know where property manager begins and general manager begins or ends. Yeah, theoretically, asset management, I shouldn't be super involved with operations, but we're a small company and the properties are small, so I'm very involved. But like theoretically, asset management would just be dealing with very high level numbers and really wouldn't be getting into the weeds too much. But that's not the case right now because we're kind of still in the startup phase.
Awesome. And
Yeah.
are all of these already up and running, or are you doing renovations on each of them? What's kind of the life cycle where you're at?
The one in Grand Canyon and outside of Flagstaff, those were ground up. One was actually an old shutdown campground that hadn't been operated in like a decade. So there's some infrastructure there, but basically ground up for both of those. But we're moving only to actually be doing existing assets with in-place cash flow that have immediate cash flow. And then we have a longer term renovation. So usually how it would work is, like, for example, we just bought a hot springs lodge and it has 20 lodge rooms, 5 cabins. It's hasn't been updated in a while. So we'll come in and we're going to update the mattresses, the linens, some of the decor. We'll probably do that in the first year and then update all the website and the management. And that might be what we do in the first year. And hopefully that just increases revenue somewhat significantly by itself. And then over the next 12 to 24 months, we'll go through the permitting process and ideally expand the key count and maybe expand the hot springs day pass capacity as well. So ideally in 2 years, we've added another 25 keys and maybe some day pass capacity and amenities and things like that.
Nice. Yeah, I just pulled that website up. It's at our neck of the woods, kind of down in Colorado. That looks like a really cool existing property. Are you guys doing traditional financing or owner financing? How are you putting your deals together?
A lot of our sellers have done seller financing or put seller contribution into the fund. So that has been a big advantage for us. We are also doing seller financing. That's not really my role, so I don't have super detailed answers, but I estimate we're probably financing 40 to 60% of each project cost with the purchase price and the construction.
And did you guys set up a fund, or are you doing capital raise for each individual project?
So we did fund. So we just closed fund 1 in 2025. So we raised 20 million and I think it was 17 million in cash and 3 million in seller contribution. And that closed December 31st, 2025. And that was our first 6 properties, maybe a 7th we might be able to fit in there as well. And then we're looking to do fund 2, and we're going to be a lot more focused on bigger deals, in-place cash flow, focusing on hot springs, and more. We're kind of moving away from the RV resort campground world and more focused on hardwall lodging opportunities. Although the property outside Flagstaff, where we could be adding anywhere from 4 to 10 soft wall seasonal units. So there's a place for that. So we're going to experiment with it. And we were just chatting with a potential partner, and their bell tents that are $2,000 are some of their highest ROI offerings. So, glamping still has a place. I'm not totally discounting it. So it has to be the right the right place and opportunity.
Yeah. Do you feel like mixing those things in is helpful? Like having a base where you got the infrastructure and then you can add on a couple, or is it better to stay? I'm a campground. I'm a micro resort. I'm a, you know,
This is kind of the $1 million question. So traditionally, I would have said, and the reason I think this is because I spend so much time looking at RV resorts that want to add glamping. They want to add domes, tents, cabins, and domes, tents, and cabins at an RV resort tend to perform relatively poorly from an ADR and occupancy perspective. They might have, let's say you take a cabin, let's just say you take a standard cabin, you put it at an RV resort as kind of like an afterthought. You might have an ADR of 150 and probably an occupancy of 45, I would say, is on average. But if you took that same cabin unit and you went and put it on a glamping only property that's a real branded and curated experience, and it might still be the same unit with mostly the same stuff, but you're just not at an RV resort and you have its own brand, I might expect that same cabin to do 200, 225, 250 a night with 60, 65% occupancy. And that is because I spent so much time looking at comps for RV resorts that wanted to add units and trying to find an RV resort that had high ADR glamping or cabin units was almost impossible to find. They usually were heavily anchored in their price. So my theory has always been that your lower quality units, and this is, I think I'm against the masses when I say this, but my opinion has always been that your lowest quality units, whether you want to add camping tent sites, RV sites, or like really low quality bell tents, will pull down the overall premium feel of your property and your brand, and they might hurt the earning potential of your best units. But we were just looking at some data that might have suggested otherwise. And we just chatted with a partner who had some pretty compelling arguments for why bell tents were great. So this property that we were developing, we wanted to put in 10 RV sites when we had 35 cabins. And I was super firm. I was like, no, this is going to hurt us. This is going to hurt the cabin ADR potential. And we won't even make that much on the RV sites. And fortunately, like, the leadership listened to me and we nixed that. But if it was the other way where we had 60 RV sites and only 10 cabin sites, then maybe you do add those sites, right? So it depends on your unit mix. Yeah. So yeah, it kind of depends. Does that answer your question?
yeah. So we just did a KOA conversion for a lodge, and we're looking at kind of phase one of putting in some great amenities, and then they have lots of room to develop out. And this is up near Monarch ski resort. What do you think in those types of markets? If you now got an RV spot, what do you think upgrades that? Is it great amenities? Is it pulling in better cabins? Like, what would your approach on something like that be?
Can you tell me a little bit more about what the product, like what the land is like or what's there existing?
So standard KOA, 60 unit RV, great location, close to skiing. You got whitewater rafting, fly fishing on the Arkansas. So you've got all these base camp, great for adventure. And then the RVs are doing okay. But do you come in and do you spend a lot of money on new cool amenities? Do you just let it be what it is? You put in little cabins. Do you really push up, go high for higher ADR, very nice units? What's your approach when you begin to
Yeah.
underwrite, look at what unit mix should make sense in something like
That's super similar to the whole exercise we just went through for the Flagstaff property. It was a 65 unit property. Flagstaff is very cold and snowy.
that? Mm-hmm. Very similar.
Cold and snowy does not lend itself to RVs, and it does not lend itself to canvas-based units. I assume Monarch's like I haven't been to that ski resort.
Smaller ski resort.
Is it pretty nice? Is it like kind of
It's
a more
similar to Flagstaff's.
okay?
What is that up there? Yeah.
Yeah. If it was me, so you could obviously add amenities for the RV. You stay focused on the RV customer, and you could add some low-hanging amenities like a dog park, sauna, walking trails, or some other simple things that might might only be $50,000, $100,000 in spend, but can boost your website and the things you might rank for in OTA searches and things like that. You only have 65 customers to spread that cost over. And if you're in the mountains and it's a snowy, cold location, you're probably only getting 4 to 6 months of a real operating season for those RVs. Trying to do a big amenity upgrade, you're not going to be able to spread those costs over that many sites. What I would do there is what we're doing at our Flagstaff location is that I would come in, I would get rid of all RV and tent sites, and I'd kind of do a total brand makeover. KOA is a great, strong brand, but if I was trying to say, hey, we're moving away from tent camping, we're moving away from RV resorts, we want to go only kind of a middle to upper tier cabin resort, and that might be 70 to 100 grand on 2 to 400 square foot park model cabins that are on wheels. I'm guessing if it's an RV resort, the zoning is going to allow units, RVIA certified units on axles, which you should be able to bring in there pretty easily without much fuss, but every county's different. And then I would rebrand it as a cabin resort that does just as well in the winter as it does in the summer. Because RVs have a tough time navigating in the snow, driving in the snow. Their pipes have a tough time, not freezing in freezing temperatures, and so you're always going to have like those challenges. But if you're a more permanent cabin resort, you can operate year round. And 65 units is really small for an RV park, but 65 units is great for 65 keys for a cabin resort. It's perfect. Yeah, so that's how I think about it.
Yeah. So you did a ton of underwriting, a lot of other deals to now be able to pull in and look at your own deals. What were some of the most successful projects that you saw that actually worked well? And then we'll look at the other side. Like, you don't have to call anybody out by name, but maybe kind of describe the projects of what did you see and learn, and who's doing this right?
Man, I think the people that we did a lot of entrepreneurs, people that were building their first projects. And what I think a lot of them did very well was they created something very unique and original. And that is just such an impressive competitive moat. So from a revenue perspective, you're going to do very well and you're going to be very insulated and you're going to have strong demand. Like I'm thinking of a treehouse resort up in Acadia, thinking of your guys' Spirit Mountain. I'm thinking of some projects. We have another project that's doing tree houses near Asheville. And because those units were all individually built, as I'm sure your units were at Spirit Mountain, some competitor can't come along down the road and go buy off the shelf that unit and open a competitive business down the road. So your product is pretty defensible and relevant kind of in perpetuity, or at least it's going to be really hard to replicate. And it's always going to stand out and be differentiated in the market. So I think adding a barrel sauna is great. Like it's 10 grand. It's a great amenity and you'll do better. But also everybody and their moms can add a barrel sauna for 10 grand and throw it on the property. It's very easy to do. Doesn't mean you shouldn't do it. But if you wanted to take things one step further, maybe you do a floating sauna, which is what a couple of our clients did actually, or you do a uniquely architected sauna that's hand built, and it might be 20 grand and take 5 times as much as your mental space, which may or may not be worth it. But like that sauna will be a differentiator for you moving forward. So I think for customers in feasibility, what a lot of them have done really well is build unique differentiated sites where I think they're going to have high revenue demand that will be insulated. So they'll be good. A lot of them are smaller. So I think they'll run into some of those things on the expense and operation side that is harder, where it's like paying a good GM if you want a GM, paying for good media, marketing, and advertising tools. I think they might run into those challenges. And yeah, did that answer your question?
Yeah. So let's do some name call outs. What are some of your favorite projects out there that whether you looked at or not?
Yeah. A couple of our clients that I now see that Spirit Mountain is open. So you call that out 100%. Oh, sick. I think that will be one of the premier outdoor and experiential hospitality, regenerative. You strike like every box in all of the DR. Honestly, I think it will be, you could get massive press, international press for a project like the ones that your guys are doing. It checks every box. I'm sure it was really hard to get there, and I'm sure those units weren't cheap, and it took a lot of time and like a lot of costs. But I think over the long run, over the 10-year time horizon, that will pay off. Some other really great ones, the one in Maine I was talking about is called Arbor Camp up in Maine outside Acadia. Really cool. 13 tree houses in phase one. They're about to open their kind of deluxe tree houses in the next couple months. Tuxedo Falls is doing really well. That's another treehouse slash cabin resort outside of Asheville. Again, that's like I think it's 13 or 15 units. There's one in South Carolina that just opened, and it's these tents. It's standard safari tents, but they're all around a small pond. So they have these kind of cool decks that almost go out over the water. And it's like a farm with these Highland cows. And it's fairly basic, but very soulful and very unique. I can't remember the name of it right now. And then we have another cool one up on Lake Erie. I guess we've had on the podcast, but it is Soul House. SOL something, but it's floating houseboats. They're the ones building the floating sauna. That's super cool because it's one of our only clients that I know of. It's one of the only floating cabin developments that I know of in the whole country. That's super cool. Yeah. So
Love it.
those are a few of
Love
them.
it. When you're underwriting these properties, what do you see as some of your very key metrics to make them work? And what numbers are you looking at?
I'll tell you a big insight that I've had in the last few months. Our first property, which it's called Outpost Grand Canyon. It's 12 Airstreams, all with private hot tubs, and then a shared sauna, dog park, cold plunge, campfire. Small, it was built on a budget. Eric, our head of development, did an awesome job coming together. I think he was able to build the units for like $65K a piece, super cheap, and bought Airstreams at auction. And one of the massive insights is just private hot tubs are like, if you can add a private hot tub to your unit, that is probably the biggest no-brainer from a revenue perspective. Almost guaranteed that that will pay itself off in the first 6 to 12 months. It's usually going to cost you 8 to 15 grand, probably on the lower side of that if you're savvy. Doesn't need to be a super fancy one. They started the property in the worst way that you could imagine. They finished the property and they were basically like, I guess we should build a website and create a social media now, like the day the property was finished, which is exactly the wrong thing to do. You need to be launching your website, building your SEO, building demand, building a customer base, an email list at least 6 months before you open, ideally 12. But what was super interesting about that property, fortunately, it's right on the main road into the Grand Canyon. So it gets really good visibility and demand, a really strong built-in demand generator. So that's very helpful for what we call as occupancy stabilization. In the hotel industry, usually people say you'll stabilize your occupancy by year 3, probably more realistically year 5, but that just means you hit a point where your occupancy is no longer increasing and you have kind of settled at what your resting market occupancy will be for your offering. Now, underwriting is always a fascinating thing. We usually say if a property is going to stabilize at 60% occupancy in year 3, then maybe it will be 35% in year 1, 48% in year 2, and then 60% in year 3. So it takes a while for your property to be absorbed in the market, to build reputation, to build SEO, to build a following, to build repeat customers, to become known. And I had always been on the more cautious side of a slower stabilization. This property, we basically, in September, we threw this property up on booking.com, Expedia, Airbnb, Goda, and HipCamp. And by our second quarter of operations, which so happened to be Q4, so October through December, which is low season for us, we were able to get to 60% occupancy in our second quarter of being open, which was way faster than I would have projected our property to do. And the way we did that was from the OTAs. So it's just built-in exposure and demand, most of it coming from booking.com because the Grand Canyon brings a lot of international tourists. But the important thing for your listeners to think about is every OTA takes 15 to 20% of that room fee. So if a customer books for $100, you're paying booking.com or Airbnb $15 to $20 of that. And they don't share the customer email or the customer phone number with you. You can only communicate through their platform. So you don't, and it makes your customer communication way more difficult. We've had a myriad of issues. Our texts don't go through, our emails don't go through. It's the bookings aren't communicating with our PMS. It just adds like a layer of complexity. If you've ever booked a hotel through Expedia, or booked an airline through your points, and then you need to make a change or you need a refund, and then you have to deal with customer service, like it's a nightmare. And we deal with that on the other side, on the property side. So the big insight was that you can stabilize your property a lot faster with these tools, but it's going to cost you 15 to 20%, and it's going to be an operational nightmare with the guests and dealing with these third parties.
Yeah. It sounds like you're a believer in getting the direct bookings, getting control of your assets. Can you do it the other way and like get it up and primed and started with bookings and your OTAs and then peel it off? Or do you feel like, hey, you really need to start right up front with that investment?
I mean, you're going to save yourself. It's better in every way to pay the 100 grand up. Like at Outpost, if we paid the 100 grand up front to build our own brand and direct bookings, it would have been better in every category, because aside from having to pay the 100 grand up front, we would have invested in better content and media that we own, better social media followers, more of a direct email list, and then we could communicate with our customers directly, having less operational issues that come up when guests are coming on property and communicating and stuff.
All right. Well, let's get you one last question then, and then we'll wrap it up. So let's imagine you're starting from zero today. If you wanted to build $100 million hospitality portfolio starting in 2026, what strategy would you pursue right now?
If you look over maybe like a 10-year long-term horizon, maybe doing ground up, and you are like well capitalized, maybe building ground up developments with a really strong brand makes sense. And I would say kind of like exactly what you guys did at Spirit Mountain. You do that at a large scale, you do that at multiple locations. That's an awesome long-term brand where you take that unique unit and that experience and you replicate that across multiple locations. That's really hard because of the development piece, finding good land, getting it entitled and permitted, then going through construction. That's, a 2 to 3 year period. It's really hard from like a returns and investment perspective. I think probably what I'm looking more at now is existing assets that can be renovated, repositioned, expanded. So that might either be, old campgrounds, old RV parks, old hotels even, and taking something that has a short-term path to cash flow with a longer term path to like expansion. That's the path we're on right now. So call me up in 10 years. I'll let you know if it worked.
I'm sure it will, Connor. Yeah, you guys are doing some great work. It's good to watch you in your career moving from one step to the next, and it's been good to get to know you as a professional, as a friend. So I'm wishing you guys all the best on your ventures. If people want to invest or get in touch with you, what's the best place for them to do that?
If you're interested in investing, you can go to clearsummitinvest.com. If you are interested in chatting with me, you can shoot me an email at connor@clearsummitinvest.com, or you can find my LinkedIn and message me. It's just Connor Schwab, ConnорSchwab. Always happy to chat. I love this space and I love the entrepreneurs. So I've been really heads down in this new role. I've just starting to poke my head up, but I'm always trying to help entrepreneurs in the space, because I just love what folks are doing, and I want to give as much free advice and as much free resources as I possibly can to help people, grow and get more people outside and connecting with nature.
Love it. Love it. Well, thanks for being on the show. Until next time, Connor, take care, man.